Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at MMYT, or MakeMy Trip Limited. MakeMy Trip Limited is an online travel service company that offers travel products and solutions in India and the United States. Here's the barchart.com technical opinion rating for MMYT. The bar chart rating is a 100% buy with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. The market is approaching overbought territory. Beware of a trend reversal. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that MMYT is well above the moving average line, so the monthly trend in MMYT is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since the chart started, so the daily trend in MMYT is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. MMYT is below the upper Keltner channel line, so MMYT is inside the buy zone. Since the trend is up, we want to buy a call. MMYT has 7 option chains to choose from. We're going to use the October 18 option chain. Right now, the October 18 options have 54 days to expiration. Here is the MMYT option chain for October 18. MMYT closed at 100 even on Friday. That means any calls on the list from 50 to 95 are in the money. Let's take a look at the profit potential for purchasing the 100 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 100 call is 750 to 8 even. We try to enter at the midpoint, so we'll use 775 as the buy price. Our call option calculator shows the profit potential for this call based on MMYT price changes at option expiration from flat to a 12.5% increase in price. We can see that if the MMYT stock price is flat at 100 even at option expiration, the 100 call will lose 100% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 85 strike call to see if it qualifies for the 1% rule. Here is the call option calculator picture for the 85 strike call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the MMYT stock price is up 1%, the 85 call will lose 9.3% of its value. We want that to be break even or better, so the 85 call does not meet our requirements. Let's see if the 70 call will work. The bid-ask spread for the 70 call is 28.90 to 33.20. We try to enter near the midpoint, so we'll use 31 even as the buy price. The 70 call works. If the MMYT stock price is up 1%, the 70 call will break even. Break even or better is fine. So the 70 call is the one we'll buy. The call option purchase calculator also shows that if the MMYT stock price increases by 2.5%, the 70 call will make a 4.8% or $150 profit. If the MMYT stock price increases by 5%, the 70 call will make a 12.9% or $400 profit. If the MMYT stock price increases by 7.5%, the 70 call will make a 21% or $650 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the MMYT stock price does not make the expected move up and remains flat at expiration, the 70 call would only lose minus 3.2% or minus $100 compared to the minus 100% or minus a $775 loss for the 100 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the MMYT October 18 80 strike call and sell to open the MMYT October 18 90 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 80 call for $21.85 and sell the 90 call for $14.70. $21.85 minus $14.70 equals $7.15. So the entry price or debit cost for the spread is $715. The call option spread analysis calculator picture shows that the spread will make a 39.9% or $285 profit if the MMYT stock price declines by 7.5%, remains flat, or increases in price when the options expire. Creating the debit spread will allow us to collect a $1,470 cash credit to our brokerage account for the sale of the 90 call. As we said in the previous slide, this reduces the cost of entering the spread to, $715. Here's a note regarding earnings reports. The next MMYT earnings report is scheduled for October 22nd. Let's review the trades one more time. The first trade was a call purchase. It's a Dubai to open the MMYT October 18 70 strike call for 31 even. We also reviewed the spread. Spread said Dubai to open the MMYT October 18 80 strike call and sell to open the MMYT October 18 90 strike call at a debit of $7.15. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.